Hi everyone. Today we learn how to make journal entry for cash purchase with sales tax. So what is sales tax? The sales tax is the tax that a government charge from a customer. So when we buy uh, goods or a service, so supplier will charge sales tax from us. About sales tax rate is different from one country to other country. Some country sales tax rate is 10% and other maybe 20% or 15%. For our example, it is only 10%. So let's see our example together. We assume XYZ company purchase inventory in cash for 110,000. We assume amount include sales tax. So I mean that supplier include already about the tax charge from us 110,000 and sales tax rate 10%. So how can we make journal entry for that transaction? So the first time we need to calculate amount before sales tax. Amount before sales tax we take 110,000 divided by 1.1. Yeah, uh, 0.1 represent 10%. So equal 100,000. Then we can make journal entry debit purchase or inventory. How much? 200,000 and debit sales tax. How much? 10,000 and credit account payable. How much? 210,000. So we know that the cost of inventory only 100,000 because sales tax we can claim from our government when we purchase inventory from our supplier. So supplier charge tax from us, and then we can claim that tax from a government. So sales tax is not cost of inventory. Thank you for watching our video.